Good evening, everybody. So tonight, what I'm going to do is, we do a lot of sessions where we go through and say, all right, here's what's happening, but we go through pretty fast. And so I'm going to kind of just take a step back here, and I don't have any fear of replicating information, because it's something that I, even myself, forget what the power is of some of these signals and patterns that I just a lot of times brush through and anticipate that everybody else kind of knows what it is and should be looking at it the same way I am. So what we're going to do tonight is we're going to kind of describe why the candlestick signals and patterns are as powerful as they are on a individual basis. And then obviously we're not going to have a session on Monday since the market will be closed. Next Thursday, we'll probably do the same type of session, except now we're going to take that information and say, all right, let's extrapolate that into after the first of the year, which is usually going to be a good indication of which sectors the institutions are going after. And the reason for that is there's probably not a whole heck of a lot of buying going on for the next, this week, the next week. The buying will all start coming out of the chute right after the first of the year. And what is usually very obvious based upon the graphics of candlestick signals is it immediately illustrates what the big money is thinking, what sectors are going to be acting the strongest. Now, obviously, we've got an extra boost this year because of the election. So I always get questions that people ask, well, isn't this move because of an election, because of earnings, because of an announcement? And the answer is yes. That's what usually happens after after some sort of event. What we want to be looking for, though, is what happens, or what is the investor result of that or sentiment after that event. Again, whatever announcement it was. And I say that because a lot of people kind of lose the fact that they're owning a stock because it's anticipated that the earnings are going to be great. They announce earnings that are great, and it immediately turns around and goes down in the other direction. So from that, you get a lot of information that is not, not in line with what most investors think. They're always saying, well, this is what we should expect based upon that information. Except now you have to analyze that everything that you expect or I expect isn't necessarily what everybody else is thinking. So the obvious is you got great earnings. That stock has been going up in anticipation of those great earnings. And when they're announced, you can see everybody starting to take their profits there. So you want to use the candlestick signals and patterns to tell you what's actually happening in investor sentiment. And that's why I tell people you don't ever listen to anybody, because there isn't one person out there that is any more knowledgeable than what the general market is thinking. So this is why, This is why we want to know what the different patterns and signals tell us. I mean, this is going right back to the basics. When we look at something like this and see the scoop pattern and see that it did a kicker signal and it broke through, we've got a much more visual analysis accuracy, knowing this tells us there's been a change from this. This tells us we've got a little pattern. And now we've got all the other elements that we can utilize to analyze a trend, such as the T-line. We stay long until we see a sell signal and a close back below the T-line. Jason, that's pretty much it. That's why I always laugh, not laugh, but I always take for a grain of salt. A lot of people say, oh, we listen to Kramer. Kramer doesn't have any more insights to what's going on than anybody else. So let's kind of take a look at what actually happens with candlestick analysis. If you go back to the very simple basic of what a candlestick signal is, which is it is the graphic depiction of everybody buying and selling during a specific time frame. So there's our pattern. There's the results of that pattern. We can analyze the overall market trend in a matter of seconds. There's our little doji harami. There's our gap up the next day. There's our best friend signal. How long do we stay in this trend? Until we see a sell signal and a close below the T-line. Kramer, not Kramer from side. Oh, did I say that right? Buy, sell signal, whoops, and a close above or below the T-line is most of what you need to know. And that alone, yes, Stanton, that'll be a good trading technique for probably about 85 to 90% of your trades. So if we can analyze what the overall market is doing, that puts us in a situation to tell us, all right, obviously we want to be more bullish than bearish up until this point. What criteria do you use to exit a trade early based upon solely negative candlestick signal, alternately the following confirmation day? I'll try to address some of that, Fred. Well, part of that is if you start moving too far away from the T-line, you start going to your 10-minute chart and use that to get to anticipate. So anyways, if we know the market is heading in a specific direction, we also can analyze which sectors might be moving based upon their individual commodities, such as crude oil. We can see what's happened to crude oil. It's back up at the top of the trading range. We can see there is a trading range being set up. So that helps us with our analysis of which sectors might be the best ones to watch. On the other hand, you get something like, oops, that's not what I want, gold. When you can analyze that gold is not heading up, it's still drifting lower, you can pretty much assess, all right, I probably don't want to be in the gold sector. Now, there are easy scanning techniques. If you're using TC2000, you can scan to see which sectors are acting the strongest. How do you identify stocks to avoid and stocks which have momentum? That's very simple. That's coming right back. That's kind of what we're doing, going through Cali. If we see that the gold sector is not doing very well, if we can see that the transportation index has had a strong move and backing off, that tells us, all right, when the whole transportation index is starting to back off a little bit, maybe it's time to take some profits in some of our transportation stocks. Now, that doesn't mean you can just go ahead and sell stocks that are in the transportation sector. You take a look at each individual chart. You can tell that the probabilities are getting stronger that those stocks might be showing sell signals. On the other hand, when is it time to buy? just like anything else. If your sector is starting to show strength, now you want to probably address those stocks with a little bit more diligence to see what stocks in those sectors are working. The other side of the coin is whether you're trading an index or an individual trading entity. We were getting ready to buy coffee, and it started showing strength from here. But notice what's happened. It's failed. So not only does it tell us that we don't want to be buying, it's telling us we might be ready to go short because we can see what type of pattern is setting up, a bearish J-hook pattern. This is being recorded, Sheree. So this is where the signals tell you to observe the obvious. We know what our bearish engulfing signals tell us, especially if they're in the overbought condition. Telling us it's time to take profits up here and or time to go short. When was the time to start covering your short positions? When we started seeing confirmed buy signals. Was this the absolute bottom? Definitely not, but look at the probabilities. We're starting to see buying in the oversold area, starting to move back up to the T-line. Excuse me. What are our probabilities? Our probabilities are pretty strong. There's some buying coming in now that we're in the oversold area. So that's when, if you're shorting up here, again, we're not trying to short from up here at the very top. We're not trying to buy down here at the very bottom. We're trying to short and have this high probability move and then move on to the next one. So what did I just do? And we can analyze what a trend is doing. Notice what's happening here in the wheat trend. Anytime we can observe what's happening as far as kind of a trend channel, or that when we get up to the top of that channel, we start seeing sell signals. It's not that we were looking for sell signals when it got here. We were just more conscious of starting to look for sell signals when it got here. Had it gone right through, it would have told us we had a different dynamic, that we were broken out. On the other hand, the more facets we can put into our analysis, that we saw a doji just as it hit this upward trend channel and started going the other way, that's additional confirmation that our downtrend is still in progress. So again, what we're kind of trying to review here is everything that we want to put into our analysis, because this past year, other than this past 4 months prior to the election, was a decent, profitable year. And there was good trends in it, and then something like this just was boring as all get out. So not only does the charts tell you when to be trading, it also tells you when not to be trading. Because in this whole sideways mode of trading, you can see what was happening. There was just nothing definite. Up one day, down one day, up next day. There was just nothing here. So a lot of people say, well, if you're trading above the T-line and it's going back below the T-line and back up above the T-line, how do you trade that? The answer is you're not trying to trade it. You get the visual analysis that nothing's going on here, that maybe I've got to change my modus operandi and say, all right, I need to see this trend, something break out before I start committing funds again. So there's a lot of times, I say a lot of times, there's times when the market is telling you, don't be trading. Now, fortunately, in a situation like this, there's always going to be one or two sectors that are either moving extremely bearish or extremely bullish. And fortunately, we have the capabilities to analyze those almost instantly to find out which ones, what those sectors are. So even when the market's moving sideways, we still got good potential of making some good profits depending on what we're looking at. So the market analysis in general is the first criteria for which direction you want to be trading. Obviously, if the market's moving up, whether you're a swing trader, a day trader, a scalper, you probably want to be moving in or trading in a positive direction. That's where you can get most of your strength. Same scenario. If the market's moving down, you probably want to be trading to the short side. If the market's moving sideways, now you know you've got to be in and out pretty quick because it's not really going anywhere. So because we know that the market's moving in a certain direction, we want to make as much hay when the sun's shining or when it's sunshiny. So we're looking for the patterns that we know what the results of those patterns should be. That's why we were recommending MPET yesterday, because notice the type of breakout of this fry pan bottom. What do we expect coming out of a fry pan bottom? A very strong price move. What do we expect off a kicker signal? A very strong price move. So if we see a fry pan bottom breakout with a very strong buy signal or reversal signal, that tells us we want to be buying because that's exactly what the pattern is telling us. So we want to look for those type of pattern setups. And additionally, not only do we want to look for those patterns, we want to look for confirmation. There's a nice J-hook pattern setting up an LPG. We recommended it today based upon if it started trading higher. That meant we probably confirmed our J-hook pattern that it was at least heading in this direction. The fact that they opened it lower and never got back up again keeps us out of bad trades. So a lot of people ask, well, there's a lot of times when you put out 3 recommendations, not all of them are working. That's exactly right. Not only are they not working, but it's also illustrating to you that if you're looking at good trade setups, you want them to be confirming the next day. So not only does the pattern tell you when to get in, it tells you when not to get in. So you get a lot of information built into the candlestick signals based upon the pattern working or not working. So we were buying HIQQ today because we could see the J-hook pattern setting up that if it opened positive, it's confirming kind of our doji sandwich and breaking out through this level. It tells us we've probably got good upside. This one had decent upside. I think it was up 8, 10, 12% on the day. So there's only about 6 or 7 patterns that you really need to know or you want to know. We know what the belt hold signal tells us. When they gap it way down here and then the bulls start right back in, that tells us they are sopping up a lot of the sellers and there's no selling in front of you at that point. Now we know the probability that any buying is not going to run into any selling resistance. That's usually going to create a very strong price move. So any chart you go back and analyze, you can see the different patterns. You can see the slow curve break out to the upside. You can see when it started getting a little bit testy up here. Now we know that we got a wave 1, wave 2, probably wave 3. If you didn't buy it, just get ready to buy it on strength because that's what we expect coming out of this pattern. So when we expect something to happen based upon a signal or a pattern, it puts us in a situation where it tells us when to buy when that pattern is confirming. Now, we recommended NVIDIA a while back when it broke out through here. Notice our little hammer kind of little mornings or a abandoned baby where it gapped up the next day, gapped down one day, gapped up the next day. When it broke through this level, what could we assess? We had strong buy signals. We weren't in the overbought area, and we were breaking out through a resistance level. That told us we probably had another wave like this, same magnitude as this wave right here. So because how do we know NVDA might not go sideways? We don't. We don't know whether it's going to go down. We just know the probabilities are on this type of pattern that we should be still moving up to the same magnitude move as this. That's I mean, that what if Or how do we know? How do we know anything? How do we know that a kicker signal, which is the strongest candlestick signal, isn't going to go right back down again? Because we anticipate what happens time after time in human nature that indicates what should be happening out of that pattern. The reason we recognize patterns is because human nature works the same way time after time. We're just analyzing to recognize those different patterns so we can take advantage of that next move. Are there specific patterns you use for early entries before confirmation? Not really. I'm looking for the pattern itself. Again, I'm not trying to buy right here. I want to buy right here knowing that this pattern is confirming. I want the fat part. Anytime you start trying to grab for the very bottom and the very top, if I can keep my keep a high correct trade ratio going, the compounding effect is tremendously bigger than trying to grab for the lowest point of a trend and the highest point of a trend. So I know there's some trading techniques, Rick, at hit or miss candlesticks. Use pullbacks on patterns. I'd rather buy into strength that tell me that it's confirming with the direction I want to go. Stock is staying above the 8. Yeah, as long as it's right now. We recommended AMD down in this area. We're just staying long now until you see a sell signal and a close below the T line. The reason we got into this is, notice we had people were buying this, but we didn't recommend it until here because we could already see what the pattern was setting up. This is your little scoop pattern, and or your wave 1, wave 2, going into wave 3. What else? Oh, we recommended PI the other day. There was your J-hook pattern setting up. So we were buying right in here and got a good price move. What are we going to do now? Just continue to hold until we see a strong sell signal. Whiting is one that we are recommending not only for short-term trading, but for long-term trading. We can see what's happening here. Big, huge fry pan bottom. Now a J-hook pattern. So if this is wave 1, wave 3 takes you up to about here. What's that tell us about this level? It tells us they broke out. Still got a lot more upside. Yeah, hang on to your individual ones. I think I've got Twillo on here somewhere. So what happened when Twillo hit the 50? Sold off. Is this showing signs of strength? No, it showed us as soon as they hit the first resistance level, they weren't trading. What was the candle that told us the bulls were taking control? Obviously this candle right here. After a series of dojis, they pop it up. So who was in control? The bulls were in control. Today they closed it more than halfway down this candle. One of the very simple rules of candlestick analysis is the Japanese rice traders simply tell you that if the bulls are in control and the bears were able to close it back below the candle, halfway point of the candle that told you the bulls were in control, the bears are still in control. Close it out. Now, a lot of people have difficulties, and this is one of the things that we're going to be going into with much heavier emphasis in some of our trainings right after Christmas, is the emotional aspects. A lot of people have a hard time buying, and then it goes against them, and they just can't sell. Because why did they buy? Because their analysis said it should be going up. What you have to learn about investing is not only do you need to recognize when it's time to buy, but you have to recognize when it's time to be back out of a trade that's not working. And the reason a lot of people can't do that is because of the emotional attachment to a trade. That's why one of the aspects that we kind of emphasize is that every trade you put on should be equal dollar amount. So if this unit didn't work, you can just mentally say, yep, this is a trade trade unit didn't work. Let me close it out and go find a trade unit that is working. No, it's the body. Remember, the two important aspects of candlestick analysis is where did they open? That was the first decision. Where did they close it? That's the second decision. The shadows up and down aren't decisive decisions. They were just trades during the day. So it's the candle that is the important factor. Okay. Oh, I pointed to something. Oh, this one. So here's, this was kind of, I should have been doing this right after this one. We recognized what was setting up here. That J-hook, slow curve, supporting off the T-line. We're looking to see what happens in investor sentiment to tell us they're breaking out. So when we find charts like this is COLB. Notice it started with a little best friend signal, doji gap up, still in an uptrend. It can still be bought on positive trading because if it opens positive, what's our simple rule of the doji? It's going to move in the direction of how they open it after a doji. So what's going to happen from here if they open up positive? They should be trading positive. And if they're trading positive, what's it tell us about our resistance level? Our resistance level is not there anymore. We're probably heading to our next target, which would be the existing trend somewhere up here. So the visual analysis of candlestick charts pretty much allows you to identify what everybody else is watching. Here's ONIS. Still has this fry pan bottom aspect to it. How long do you hold on to a fry pan bottom? Very simple rule. Because of the amount of accumulation of knowledge creating this pattern, it tells us the bulls are getting back in control, and they will be in control as long as it stays above the T-line. So when I see something like this and it looks junky, I don't have any concern as long as they don't close it below the T-line. Sam, hold on to your individual ones until after I get done here. We'll try to get as many as possible. And so here's another one that tells you, all right, if this was the candle that told us we had a big breakout, what did the next candle tell us? Well, they closed it more than halfway down this candle as a dark cloud in the overbought area. That told us there wasn't a lot of force. Now, if you held on to this one, now we have just basic rules. It needed open positive and trade positive. The fact that it closed lower told us, all right, now they're heading back here, at least to the T-line. I look at weekly patterns to screen some of my stocks, then look at the daily. Sometimes during the week it may go down, but I get stopped out, but the weekly pattern's still good, and I lose out. I think in a prior seminar you stated if you got in on a weekly, stay with the weekly signal. No, I don't think I said that. I think what I said is if you've got two patterns that look good and you can't tell which one's better, then go to your weekly chart and use that as an additional confirmation. But depending on your time frame that you're trading, if you're trading a longer term and you're using the weekly as kind of your standard, then you keep trading off the weekly. I'm a swing trader, so I use daily charts. The weekly chart is just an additional confirmation to tell me which one of those two might be the better of the two. Let's see. I've got some here. Yes. So again, does every pattern work? Definitely not. There's our scoop pattern setting up. But yesterday when it opened, we were recommending this on positive trading, I think above this level. Well, it opened and immediately went down. So what did that tell us about our trade entry? Told us wasn't time to get into that trade because we didn't have confirmation. So not every trade setup is going to confirm, obviously. What we want is the ones that do confirm. COLB, whoops, COLB. UOB just looks just like Twilio today. Perhaps it is going lower. Are we looking at the same one? This one looks like it's trying to break out. Twilio had a whole different dimension to it. It broke out, but look where did it break out to? Right at a resistance level right here. So that becomes your obvious warning that if this is going to break out, if I didn't buy on this day right here, and I probably wouldn't have because this was the signal to tell me when to buy. If I was buying today, it would have been on the basis that I want to see it open positive or at least open and start trading positive. Well, this one, as you can see, never traded positive. It opened up here and immediately started selling off. Where could I have been buying? If it's done a J-hook pattern after the open stayed above the T-line, but it just never got back up to any place showing us that it was time to be getting in. Blue ice failure, not, well, I don't say, where's the 200? Not necessarily. Right now, if you got into Twilio anticipating it was going to break out and it didn't, you close it out. It's just a bad trade. So don't, and this is the one thing I had to fight my way through a blue ice on Twilio. Not really. A blue ice is when it falls through the ice, comes up and tests it and fails. It's usually done fairly quickly, meaning you can see it happening. This is just a big, strong downtrend. How do you know you're at the top of the trade and not at the middle of a trade when you decide to exit the trade on a negative candle formation? Because you want to see where you are in your stochastics. Remember, a candlestick buy signal in the overbought area doesn't mean very much. A candlestick sell signal in the oversold area doesn't mean very much. So this one just tells me I've got a bad trade right now. I'd probably want to be out of it. Does that mean it's going to reverse? I don't know. It just tells me my buy is not working. On the other hand, there's kind of your left-right combo, bearish signal, closing below the T-line with stochastics up here. That's much more compelling to tell you that was the top of the trend. They've reversed it. Where would you re-enter on Twilio? I'd at this point want to see it get up through the 50. For all I know right now, it's going to bobble around. I want to see buy signals and get back up through that level. How do you use a trailing stop? If I'm in an uptrend or if I'm in a downtrend, I'm usually going to pick a spot that if I shorted here, the next day I'm going to use that area as my stop. Still short, don't want to see it close or trade back up above that level. So I'll pick a spot that tells me, especially when I get into the oversold area, where it shouldn't be trading. And that's a whole different session. That's one of the training sessions we do during the week. And that's JS. That is why we use the candlestick signals to tell us when our trend is in a direction and when it's time to close out the trend. Don't you think it is profit taking for Twilio? Not really, because there wasn't that much profits. It just told me that they resisted here at the 50, so that tells me I don't want to be in this right now because it closed more than halfway down the candle. That told me the sellers were in control. So these type of illustrations Again, there was our bearish engulfing. There was our close below the T line. When did we want to buy back? When we saw a buy signal and a close above the T line. As we can see, that didn't happen, so that we wouldn't have been back in this trade. Now, had it closed up here, what would we be anticipating was happening? That we had a J-hook pattern in progress. So knowing what a pattern is going to look like allows us to be a lot more assertive when we start seeing the right signals. For example, this is what we want to see. We want to see, this one's probably going to be on our recommended list tomorrow. Because notice what happened when it came back here to the T-line. Doji, 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 gap up. What's a doji followed by a gap up? That's your best friend signal. That not only tells us the probabilities are that we're in an uptrend, but tells us with that doji gap up that our uptrend is probably going to be a fairly strong uptrend. Oh boy, Mark, I wouldn't know a parabolic trailing stop if I fell over one. Don't even know what a parabolic trailing stop is. SQ, square. This is where, again, where do you start learning to sell? Well, notice what happened today. What's this pattern right here? That's a bearish doji sandwich. What do we expect from a bearish doji sandwich? More downside. So what's happened up here? We've got a strong sell signal, close below the T-line, stochastics heading down. I would, after being long, definitely want to be out of that trade today. Now, does that mean it's not going to pull back and then turn around and head back up? Of course, but on the next buy signal, close above the T-line, you can always buy back in. But to hold on to it, now you're playing with the probabilities, and the probabilities are probably pretty strong that it's going against you. Kara was another one that looked like it was doing a little scoop pattern. But notice what happened in this day, a shooting star type signal. Not at the overbought area, but it didn't show strength. It kind of told us that this downtrending channel was in progress. Yesterday, a couple of days ago, it did a bearish engulfing and closed back below the T-line. What did that tell us about any patterns that we had? Told us there was nothing there. Close it out and move. If you were in it, you close it out and move on to something else. So here's another one that needed to, notice what it did right here. Bullish harami right smack dab on the T-line. Open positive. Now it's broken this little triangle, and what's it forming? Kind of your J-hook pattern. So another one that I wouldn't be afraid to be buying on positive trading, because we can see what would be happening if they push through this level. That you now have wave 1, wave 2 going into wave 3. I am starting to make boxes around the range, all right? Rick, who, I've been trading for, I hate to say this, about 45 years now. I got away from fundamental analysis. I was a stockbroker with Kidder Peabody, Cowan and Company, and Oppenheimer back in the mid-70s to mid-80s. The brokerage firms had no more idea about what made prices go up or down than anybody else. It was when candlesticks were inadvertently introduced to me that I realized that the logic behind candlestick signals was so strong that to go against them was you were fighting against the probabilities. And the reliability of them is the fact that before candlesticks came along, I was the worst investor in the world. I was the one buying exuberantly at the top. I was the one panic selling at the bottom. And I was advising clients to do the same. Had I had candlesticks back then, I'd be simping mint juleps on my yacht in the Fort Lauderdale Basin, because Candlestick signals are just the graphics of what's going on in investor sentiment. How can you tell waves here again? Well, this is wave 1. This is kind of wave 2. And what do we expect coming out of wave 2, going into wave 3? And what do we expect the magnitude of wave 3? It'd be about the same magnitude as wave 1. Were stocks even invented back then? Oh, back in the mid-'80s when I was a broker, there was very few. That's right. All right, so again, we can identify what type of pattern is setting up based upon the signals and the pattern telling us what our probabilities are. Tulip bulbs, yep, they were, wasn't that the 1600s? And ENLC, what's this telling us? Told us there was a resistance level right here, and they broke through it. Wave 1, wave 2. Now you can see kind of the fry pan bottom breakout going into wave 3. John, I used to have a good friend, Dave Elliott, of the Wall Street Teachers. He and I did a lot of work together, but he would have so many indicators on his chart. I always tell him, every time I look at your chart, I get hungry because it looks like a big spaghetti ball. Well, that hasn't been resolved because now we have things like the doji sandwich and all sorts of things, so you get just as hungry. Fred, I'll try to point some out, but again, it comes to a very simple rule with our T-line, which is if you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. So anytime I start moving away from the T-line, I start watching for sell signals, not necessarily on my daily chart, but I'll go to my 10-minute chart because I already know if I'm way up here, that far away from the T-line, in the overbought condition, my probabilities of it coming back to test the T-line is going to be extremely high. So if I see this open and it starts trading higher, I think to myself, all right, let me flip to my 10-minute chart and see when the profit taking is starting. Again, I'm not trying to sell right here, but I'm trying to sell as close as I can when the probability say it's time to sell. That's right. Yeah, so the nice thing, and this is when somebody was saying the simplicity of the charts, the nice thing about candlesticks is they've been around for 400 years. Now, we haven't been analyzing them except up until the last 40 or 50 years, not because they were being kept secrets, just nobody was interested in them. And there's a one simple adage on Wall Street: if something doesn't work, it disappears very quickly. Candlesticks are as basic an analysis tool as you're ever going to come across. The thing that stays most consistent time after time, year after year, century after century is human nature. So prices, I always tell people, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And people, humans, will move prices around the same way time after time. So here's CVRR, a gap up. Stochastics coming back up. The uptrend. Where's our next likely target? I can do this with some elegance. You can pretty much draw a line up through here and pretty much draw a line up through here. That tells me that's more than likely where my next target is. Is that worthwhile? Well, if it goes from whatever this is, 10 to over 12, yeah, that's a good 25%, 25% upside. That makes it worthwhile. This is one of your basic logical patterns. This is what we call the bobble. There's our buy signal. There's our close above the T line. Where's the next target? Everybody says, where do you think the next target is? It's either the 200 or the 50. What happened when we got to the 50? A bearish engulfing signal. That tells me they're selling off. Take profits up here. But notice the next thing that didn't happen. They couldn't close this back below the T line. So when they break out through this level, notice where our stochastics are. They're in the overbought area. We just went through, we tell people you want to buy on the signal in the oversold area. Candlestick buy signal in the oversold area is probably a high probability you're in an uptrend. The converse to that is a candlestick pattern breakout is usually going to occur when your stochastics are already up in the overbought area. So if I'm selling right here, back in the good old days, if I ever got into a winning trade and got out, they weren't going to trick me and get me back in. They fooled me, got me out. I wasn't going to get back in where they could get me back in and turn it right around again, because that was my thinking. That's because I thought the market was trading against me. Now I know what human nature does. I don't mind closing out a position right here and buying back here, because now I know what the pattern should be looking like. So if this is a 10-point move, I don't care I only get 8 points of it. I just want to know that when I'm in it, it's going in the direction of what I think it should be moving. Wall Street, etc., wanted something more complicated than candlesticks to trade so they could. Rick, if you ever watch the results of Wall Street, if they're up 10% for the year, they just have celebrations, banner years. If you're using candlestick signals and using them aggressively, not aggressively, logically, you should be making 10% a month off your portfolio. Always to use risk management. Yes, and risk management is very simple. Mine is very simple. All my trades are equal dollar amount. Each trade I have is is one unit of my portfolio, so I don't have my emotions stuck into that trade. So notice the T-line crunch, the bobble breakout of this one. How long do we hold this until we see selling at the 200? Where do you think the next logical target is going to be? They're going to pull it back here. Are they going to hold here and go back up? We don't know. Close out the position. You can always buy back on a bobble pattern so that you're not holding onto something that might be heading all the way back down here. If close is below the T-line and you can't watch the open, would you put a sell stop market order that night and see what develops around noon the next day? Yes. If your trade setups are based upon the amount of time that you can spend in front of the screen. So if you're working and you put your trades on or your stops in the morning, and you have to drive to work and you can't get back to your computer until 10:30, yeah, you're going to have less flexibility. So if I had held on to this and I knew I should have been out, next day I might say, all right, if it trades down here, stop me out, because that tells me it has to open positive and trade positive to stay in it. A bobble is when you come up and you hit a resistance level and you start seeing sell signals. You close it out. But the bobble is that they really can't stay below the T-line and they bobble it around in here and come back up through the resistance level. That's where you start buying back again. But you will still be protected. I don't know what that means, JS. All right. I'm daydreaming here. Going on to another chart. So if we can see what patterns are setting up, I mean, this is just very simple. Observe the obvious. What type of pattern do we have setting up here? A scoop pattern. What do we expect coming out of a scoop pattern? A slingshot effect to the upside. What told us that they were taking it back up? Doji, doji, gap up. So we could be buying anywhere in here, knowing that if it didn't break out through this level, we close it out. If it did, we have a good, strong trend. Now, what's our definition of a J-hook pattern? A good, strong trend followed by some profit taking that really can't close below the T-line. This one can be bought on positive trading tomorrow, breaking out through this level, because we know that we've got wave one, wave two. What's wave three going to be? The same magnitude as this move right here. The light blue line. This light blue right here is the 3T line. That's the 3 exponential moving average, which becomes more effective the further away you move from the T line. So the charts are the 200, the 50, and the 20, simple moving averages. And simple moving averages because everybody says, well, why don't you use exponential? We're not using anything. We're not using these. Have these on our charts because we're just watching to see what is happening at those moving averages that everybody in the investment world has those on their charts, and the big money managers always use those to make their decisions of when to buy and sell. We've just got the graphic capability of seeing what they're doing at those levels. Oh, that was for him. Okay. It seems counterintuitive that with stochastics oversold, that the price heads up for quite a distance. It seems counterintuitive that with stochastics oversold, that the price heads up for quite a distance. The stochastics oversold. Well, again, it comes to the very simple analysis. Where do we want to buy signals in the oversold area? What's the logic of that? The Japanese rice traders say if you see a candlestick buy signal in the oversold area, that's probably where the bulls are starting to take control. That is counterintuitive. Where are most people selling? Most people sell at the bottom because of the fear factor. Most people buy exuberantly at the top. That was me. So I knew to turn my trading around, all I have to do is watch the charts and say, all right, even though I might be listening to what the talking heads on CNBC or Bloomberg are saying, they stay out of this stock, stay out of this industry, it's terrible, and I start seeing this, that tells me it doesn't matter what they're saying, somebody's out there buying. And who's usually buying? Usually the smart money. Yeah, the stochastics are based upon the same formula of the high, low, open, and close. So some people use RSI. It doesn't really matter. All you want to do is see where you're seeing a buy signal. Obviously, a buy signal in the overbought condition doesn't mean very much. A buy signal in the oversold area means quite a bit. OIS. Whoops, I needed to put a little star next to that one. Same scenario here. Starting to get a J-hook pattern. So knowing what our different signals tell us, we get a doji today. We got a J-hook pattern setting up. What would happen tomorrow on a positive open? Well, we know that it's going to move in the direction of how they open it after a doji, which means they're probably taking it up. And what's the normal reaction? That if they open up positive, this day right here is probably going to be the same as this day right here, the doji sandwich. If they close this up here, what's that tell us about our pattern? It's further confirming that a J-hook pattern is in progress. For FBP, you are saying that good bet to buy if it opens higher tomorrow. Okay. What did I just say? FBP. That wasn't the one. FCB. This one's not bad either. If it traded back up above this level, it would tell you they're probably coming back up into this trend. FCB. Yes. But if this opened positive tomorrow, what did it tell us about this pattern? Told us they weren't resisting at the recent high, that we're now in wave 3. And hold on to your individual stock requests. We'll get to them when we get done. Oh, we're way over time. Okay, again, I'm trying to illustrate that the patterns of human nature work consistently. Here's BRKS. Slow curve breakout. What did that tell us? If this resistance level is not acting as resistance, where's our next target? Probably in the trajectory of the uptrend prior to the consolidation. And, whoops, that's not what I wanted to do. ATOS, same scenario. You can see the pattern setting up. We can see we're coming out of the oversold area. Where's our next likely target? At least testing the recent highs. If it breaks the recent high, what's our next target? Probably the same magnitude move as wave 1. This is being recorded, yes. What's the difference between a J-hook and a scoop? A J-hook has a strong price move and then pulls back and goes into another strong price move. A scoop pattern usually has a flat handle, then the little scoop at the end of it. T-net. Oh, pshaw. Well, what's happening here? E-N-E-T. Well, if that ain't a fine howdy do. I'm typing in T-net and it's only coming up net. Well, we'll go on. Well, something's happening here. T-net. Notice how this strong price move, how it started with your strongest candlestick signal, ticker signal. Now you got kind of a J-hook pattern set up. If it opens positive tomorrow, what's your next expectation? Same magnitude move as this. RDWR. Well, what's happening here? RD. Oh, something's going on here. RDWR. Wave 1, wave 2. Notice the Morningstar signal broke you out into wave 3. So this is what you should be expecting based upon the J-hook type pattern. MD, there's your bobble. Came up, hit your resistance level in the 200 area, right in this area, pulled back. Now it's come back up. Notice where it bounced off. There was a long-legged doji right smack dab off the 50 stochastics coming up. So if you're buying this one tomorrow, you can kind of calculate that would be your next price move. Now that does two things for you. If you're an option trader and you want to maximize your profitability, you say, well, if this just moved, I'm picking out a number, 7 points, that means it should move up towards 75. Well, if that's the case, that my upside potential is around 75, I might go ahead, instead of just buying calls, put on a spread, knowing that where my upside potential will be. With the stochastics midway turned up on a bullish candle, does that indicate more strength? Yes, that's usually the implication that you remember. We're not buying stochastics. We're buying the pattern and the signals. The stochastics are going to follow. So if there's a J-hook pattern setting up, usually you're going to have a J-hook type pattern where the stochastics have not come all the way back down toward the oversold area or into the oversold area. So if we know what sectors are moving, we can see what's happened here. We had wave 1, wave 2 going into wave 3. Wave 3, if it's the same as wave 1, should break out into new territory, which means this becomes your likely target, somewhere up in that range. So not only can you calculate which direction it's going to move, there's a lot of times you can see where the next resistance level is. HFC. We can see the little gap up today after a little left-right combo. Left-right combo is your doji followed by a bullish engulfing signal. And notice where it all occurred, right smack dab off our T-line. Tells us if this opens positive, we could be, especially if the first move is going to be coming up here to test this level. What's that tell us? So if we're buying here and it fails here, at least we can see where it failed. We're probably out with a little bit of a profit. If it goes through, we know that now we have this type of magnitude move. So these signals work just as well on positive trading as shorting. A failure right here at the 50. We shorted this one. We're still short. Where's our next logical target? See what it does right here. If it doesn't hold there, where's our next logical target? Down here at the bottom of this channel. Why would we think that direction? Because you can pretty much see what the trend is right now, that every time they've come up to a resistance level, they've failed. Same scenario with Las Vegas Sands. The bigger the move, the more compelling. This is what you call the blue ice failure. Notice how when they fell through the ice, came back up, tested to see where they can find the hole they fell through. They fail, they drown. Where are they going? They're going to the bottom of the pond, which is down here at the 200. So this is our likely target on that one. Again, likely target with a high degree of probability. Here's one that gapped down, tried to bring it up, failed here at the 50/T line, starting to sell it off. Where's our next target? Well, there's wave 1. Wave 3 down here kind of coincides with the bottom of this trend channel. And NTLA. Oh, I don't know what's happening with this thing. NTLA. Slow curve. Notice the tails to the upside, telling you every time they took it up, they were failing. Where's your next target now that they failed to hold at the 50? Right down here. That's a worthwhile target. All right, so again, this is all to kind of illustrate where the probabilities are. Kicker signal right here tells us if they open this lower, the 50 is not acting as support. We're probably heading to the bottom of the channel, more downside. AIR, same scenario, doji gap down. Remember, a doji followed by a gap in one way or the other is your best friend signal. That could be coming all the way down to the 200. And Winnebago. The bigger the signal, remember, where do most people buy? They buy exuberantly at the top. So anytime I see a gap up in the overbought condition, I get ready to take profits. Very simple stop loss or profit-taking techniques using candlesticks. If this opened here and started trading up, I'd put my stop right where it opened because logic says if it comes back down through that open level, it's going to form some sort of candlestick sell signal. If it opens here and starts trading off immediately, I put my stop at the previous day's close. If they have enough selling pressure to come down through there, the sellers are in control. What do we want to see on a bearish engulfing belt hold signal? Confirmation that the bears are still in control. That's when you can start shorting. How are you scanning for these symbols? Our scans are on all major softwares. That's one of our training sessions we do during the week, showing how to set up the scans. They're very simple. If you can say the signal, then you can write the formula for it. If you can say the pattern, you can write the formulas for it. So all the formulas are out there. I usually do my scans either off of Metastock or TCNet. So all the scans are on both of those, and all the scan formulas for TCNet are on our website. You just copy and paste them. So once you set up your scans, you can find the best trades. If you don't know what you're looking for, and you let the scans look for them, you're going to find your best trades in less than 20 minutes each afternoon. I usually find now the best trades that I'm going to trade the next day somewhere within 5 to 7 minutes each afternoon. Can you please reiterate what each of the lines represent? The 200 is the red line. The blue line is the 50. The gray line is the 20. These are all simple moving averages. These are all the moving averages that every major money manager around the world uses to make their decisions. The black line is your 8 exponential moving average, the T line. We call it the T line because it's the trigger line. If you see a candlestick buy signal and a close above the trigger line, you can be buying. If you see a candlestick sell signal and a close below the T line, you can be closing out your position and or going short. Then we got the 3T line on here, that the further away you move from the T line, the more effective the 3T line becomes. Do you have a scan for TOS? I'm pretty sure, yes, TOS has all our scans there also. I know Ninja Trader, I think we're doing them up right now for TradeStation. Pretty sure E-Trade has them. Oh, there's a bunch more. Okay, hang on for your individual ones here for a second. Are there any more general questions on candlesticks? Now, remember, on the week after Christmas, we're probably going to do another session like this, but now kind of analyze which sectors are probably going to come out of the chute the strongest. Now, we know which sectors act the strongest for the first quarter because every analyst in the world right now is using the holidays to kind of analyze what the new year is going to bring, and they usually act on it the first couple of days of the new year. Off topic, can companies just change their ticker signals in the middle of trading? Yes. For example, I think, was it TECK? Was it ECK? Yep, they haven't changed it over, I guess. But TCK just changed their symbol to TECK not too long ago. And sometimes it's because they've been moved from one index to another. They have to change their signals. How long do you wait before open on positive open? Joseph, if I think the market's in an uptrend and I can see the pre-market futures are going to open the market up 40 points on the Dow and 7 points on the NASDAQ, and I can see the stock that I was looking at is opening positive after a strong buy signal, it may only be a minute, 2 minute, 3 minute, making sure they're still buying. Now, if I think the market is an uptrend and they open the Dow down 40 or 50 points, I'll watch to see if that's just profit taking and they start bringing it back up. It might be 10, 20, 30, 40 minutes when everything starts confirming again, and I'll buy back or start buying at that point. All right. You trading now, consider the holiday. Yeah, I've got trades on. Not as much as normal just because I'm out having to buy Christmas presents every day. But we've been buying, we bought the NVIDIA calls down here a few days back. I think I bought the January weeklies at around $3.80. Today they were trading at around $10.30, $10.40. I don't have big trades on right now, but I've got enough to make good money. How many days is a buy or sell signal valid after it forms? You don't know that. You just know that this is a candlestick buy signal. This point, it stayed valid until they closed it below the T-line. Now, I probably would have closed it out somewhere in here, but sometimes this uptrend will remain an uptrend. Let's see, which ones have been. We've got a couple steady eddies. Oh, this one was a steady eddy for a good while. I mean, you can see once we bought here on the left-right combo, we held all the way up here. We bought back in here and closed back out here. So sometimes we're not buying because we're anticipating there's a number of days that it's going to stay in effect. Once we buy, now our criteria becomes we'll stay in until we see a sell signal and a close back below the T-line. Ronald, we've got two rooms. Our normal chat room is in this room. We usually have 150, 160 people in here. Then we've got an option trading room. And the reason we split them out was so that the all the terminology being discussed in the option room wasn't confusing people in the regular room. So there's two different rooms and got plenty of good traders in both of them. So I put out 2 or 3 stock picks every day. I try to put out 1 or 2 option trades each week. And we also trade futures in the options room where we're trading different things like right now we're long live cattle because notice where our buy signal occurred. A bullish Harami closed above the 50 and the T-line. Where was our next target? Up here. Took profits, then we came back in. We're still long because what do we have right here? That is our bobble pattern. So if we know this is wave 1, this is wave 3. So we trade futures, and it could be anything. There's only about, this is the dollar. Right here was a very good buy. Took profits up here. Didn't really get back in here because we were trading hogs. So it doesn't matter what market you're trading because human nature works the same way. This could be tulip bulbs, this could be bonds, anything in between. You're buying what the investor perspectives are. How long do you wait? 10 minutes before buying a stock that has a good signal? Now, sometimes it's 30 seconds, sometimes it's 90 seconds, sometimes it's 45 minutes. All right. How do we set stop loss price using the candlestick prior to entering a trade? You may have already mentioned. If I'm buying right here, what's my next criteria? I stay long as it doesn't close below the T-line. If I'm buying right here, I don't want to see it close back below the T-line. Once it's trading, then I'm in the overbought area. I don't want to see it start trading back below the previous day's open. Okay, Jim, go ahead and do the double line. Everybody try to keep your requests at a maximum of 2 so we can get everybody in tonight. So NATI, that's what we call the message. It gapped it up. I wouldn't be buying it. If I was buying it, I'd put a buy stop just above today's open. That would tell me that today's profit taking after the open is over. The gap up is now in effect. ConAgra, you can own this one. It's not a very exciting mover, but right now you're back up into no man's land. I would suspect your first target is here. Second target is up at the 200. McDermott. McDermott needed to open positive and trade positive today. The fact that it closed below the T-line would have closed me out because now you've lost the J-hook trajectory. So probability say you closed out, you can always buy it back if it comes back up through that level. And tech was not coming in. They must not have changed this one over yet to tech. XIV, just stay long. You do have kind of a bearish engulfing. Wouldn't be surprised that if they open it lower tomorrow that you're coming back to test the T-line. Let's see. CEP. Let me guess, March. This is the March contract on copper. Right now, you can see you're in the oversold area. You've got 4 or 5 signals. Doji, inverted hammer, hammer. If I was short, I'd have my sell stop right now above today's high. If it comes up through there, that tells me the selling is stopped. If you're looking to go long, you wait for a buy signal and a close above the T-line. BPMC, nothing here. If you were short, you started covering it right down in here. Now you can get ready to go short again with the anticipation they could be coming back down to the 200. ACIA, nothing. Wouldn't be long or short. It's kind of in a wedge formation, which means it's not going anywhere. Labu is still heading down, which means the biotechs are still not doing anything of any great consequence, which means Lab D, if you can be buying this, especially if it comes up through the 50, it's gotten into this gap area, next target would be up into this range. HZNP, nothing. You should be out of this one. The gap up failed. It shouldn't have closed back below the T-line, so I wouldn't be long or short this one right now. Weibo, stay short. Notice how when there's the blue ice failure, fell through the ice, came up, failed at the ice. Doji gap down, your best friend. I would suspect they're still heading for the 200-day moving average. Worthington was still heading lower. Notice the gap down. I would suspect this one's coming back down to test the 200 area. Did it drop? Let's take a gander here. I don't know if I'll still have them up here. It dropped down a little bit. Not enough to tell you there's any change of investor sentiment there. So you just stay long on this as long as it doesn't close back below the T-line. Stay short. I would suspect you're coming back down into the trend area. You've got kind of a little bearish J-hook. Watch this level right here as your first target. And the Russell backed off today. So this has lost its trajectory. So you got some profit taking going on, which I wouldn't be too surprised at that. We're going into a holiday weekend, so I'm suspecting tomorrow will be very low volume and very low activity. Probably people evening up their books. Not so much that they're evening up their books before the weekend, but more than likely a lot of them aren't even going to be back next week, so they're just closing out their books. TSO, Tesoro, you can be buying this one on positive trading if it can break this little downtrending channel. It shouldn't close back below the T-line if you're long. That would tell you the downtrending channel is still in progress. The biotechs, still heading down. Probably see what it does once it gets to the 200. Cork, what is happening here? Cork, nothing here. You should have been out of it. There was your left-right combo. Should be out of this one. I wouldn't be a buyer of this one until you get stochastics in the oversold area. and they close back up above the T-line. Chipotle, you're still stuck in this downward trend channel. If you're long, you can stay long, but if it closes back below the 50/T line, you close it back out. It's telling you it's not going anywhere right now. FXC, the euro, still in a downtrend. Doesn't seem to want to get back up above the T line. Ralph Lauren stays short. You're in the oversold area, so if you're short, you stay short, but put your safety stop right here at today's open. If it has enough strength to come back up through that level, that's in the oversold area. That's where the buyers have stepped in. ITSE you should be out of with it trading back below the T-line for a couple of days now. I wouldn't be surprised if it comes down back to the 50. And KeyBank, getting toppy. If this opened lower tomorrow, I'd close out the position. If it trades flat tomorrow, I'd close out the position. Then you just put your buy stop just above, say, back up here at 19. That right now you don't know whether it's going up, going down, or going sideways. Stochastics aren't telling you anything. So I'd close it out because you've lost all analytical probabilities. Close it out and put a buy stop up here. If it comes back up, you're in the next wave to the upside. Again, I'd rather give up a little bit of profitability than hang on to a little bit of a loss, because if you have a loss or lose some out of a trade, that means your next trade has to make it back up again. I'd rather take my profits and then give up some of that profitability as it's moving again in my direction. AVID. AVID, you can be buying on positive trading, breaking this little downtrending channel with the suspicion that it's going to come up and test the 50, which is right where this level is. IMMY, you can be buying this one. Just make sure your volume's pretty hefty. It needs to be on a $2 stock. You probably want to see 700 to a million minimum trading so you can get in and out. Pfizer, nothing. You can see you're stuck in this trend. You should have been out yesterday with it closing back below the T-line if you're trading it. And you can see there's really no trend to this other than a slow downward trend. I'd be someplace else at this point. Tesla. You stay long, but use today's low as your stop. If it comes down through there in the overbought area, they're coming back to test the T-line. Anytime you see a sideways trend, like we're seeing right now on Amazon, you've got this wedge formation, trade someplace else until they break it out one way or the other. Bristol Myers, you can stay long, but as you can see, it's already pulled back. It better open positive and trade positive to stay in it. If it trades back below the T-line at this point, close it out immediately. You can always buy it back if it comes back up. CVI is one that we're probably going to recommend. That's a nice J-hook pattern with your best friend signal starting the next uptrend. CNAT. This one is a perfect example that if you see a big gap up like we saw up here, just put your stop at the low of the day. It should be going in this direction. They shouldn't be coming back to that level. So I would be out of this one right now. Cypress, just a slow, steady uptrend. You stay with this as long as it stays above the T-line. CRR, we're staying long. Still use the T-line as your stop. Red Hat. Big gap down. Let's see, could you see it coming? That one, probably right in here, you should have closed out the trade. As you started seeing selling and you saw a left-right combo, a bearish engulfing, that told you they weren't going up through this level. Even though it came back up today or yesterday, it wouldn't have confirmed getting back in until it opened positive and traded positive. So right now you might be considering going short on this one because it's broken all support. We did HIIQ. We recommended this today because of the J-hook pattern. You stay long. First target is the top up here, so it gives you a little bit more upside before seeing anything drastic. Deutsche Bank, another one that I'd get ready to close out if it opened lower tomorrow, because you can see how it got choppy up here, and there's really no direction anymore. The SPY, has to open positive. If it opens lower, now this little downtrending channel, you want to be taking profits. See, we did the Russell Dollar Tree. Everybody laughed when they found out I buy most of my clothes at Dollar Tree. If you're short, you stay short. But now, remember, where do most people sell? They panic sell at the bottom. I'd put a buy stop like right here. You shouldn't come back up through the halfway point of this candle. And VMW. This one you should be out of. First of all, you don't have very much of a trend. Now you're closed below the T-line. I wouldn't be short, and I definitely wouldn't be long. Netflix is a very slow uptrend. It needs to stay above the T-line to stay in it. If it closed soggy tomorrow, I'd probably close it out and then just put a buy stop back up here, knowing that it there was enough strength to move it back up away from the T-line. EVOC, boy, there better be big volume on this one also. If this opened lower tomorrow, I'd close it out. It has to open positive and trade positive. We did Tesla, CETX. You can stay long on this one if you're long. If you're going to buy, you buy in positive trading. Put your stop right here at today's low. PBCT. This one has to open positive. If it opens lower, you're in a downtrending pattern. It has to open positive and trade positive tomorrow to create the J-hook pattern. Momo, notice the big bearish engulfing signal, started your downtrend. Notice the bullish harami right smack dab on the 200. Now you've got a doji. If you were short, you probably should have covered your short on a positive open yesterday. If you're looking to go long, I'd probably put a buy stop just above today's high. If it comes up through there, again, it's telling you the 50 is not acting as resistance anymore. And TSN, Tyson Foods, another one that has to open positive and start moving above the T-line area. If it trades flat tomorrow, I'd probably close it out and wait for the next buy signal. Right now, you don't know whether it's heading up, down, or sideways. Tyson or Wynn Resort stays short. Same scenario on Las Vegas Sands, stay short. ENLC, you can be buying this one on positive trading. You've seen that it's broke out. Now you're in wave 3. CHRW. Nothing here. If you were short, you covered your short. If you're going to go short again, wait for it to trade back below the halfway point of the candle that told you the bulls had taken control. I wouldn't be long. GCAP, another one that you should have closed out with it closing below the T-line today. Not good to be long anymore. FMBH. FMBH. You stay long. If it opens lower tomorrow, you know they're going to bring it back to the T-line area. But right now you stay long as it stays above the T-line. If the market opens up weaker tomorrow, you might take your profits, just see what it does at the T-line area. Guild, nothing. This is sideways. I probably wouldn't be long or short this one. Micron, look for a 45 degree to come off of here after your kicker type signal. Thank you, John. ENLK broke out to this level. You can be buying this one. SGMS, stay short. If you're short, look for the 50 to be the target. And one more, AM. You can buy this one, provided the volume is good, especially if it breaks out through this level. All right, everybody, we'll be back here tomorrow morning. Probably not being real active tomorrow. But usually what happens on a low volume day, like tomorrow, there'll be one that starts moving big, and that's what everybody trades because it's the only one moving. So we'll see if we can find which one that is early in the morning. All right, everybody, have a good evening. We won't see everybody until after Christmas. So have a Merry Christmas if you're not in the chat rooms tomorrow.